What's going on, Growth Vue family? Welcome back to another real estate investing class. And today we're talking specifically about class and grades of multifamily real estate. Now, there is a million ways to make $1 million in real estate. And in fact, there are lots of syndicators and multifamily owners who own multiple classes of real estate. I think what's most important is to just understand the pros and cons of each type of real estate, as well as why somebody would maybe want to own an A-class apartment over a D-grade apartment. So we're going to cover that and break that down in this video. So at Growth Vue, we prefer B and C grade apartments. We acquire those apartments, we reposition those assets, and we improve the value by just better operating the asset or improving the way the apartment looks and feels and the renovation plan to the apartment. That said, there are really 4 grades of apartments that you can invest in. And so the first one is an A-grade apartment. This is really that brand new product. It's the really sexy stuff you see in downtown. It's the infill or the core plus type product. It's the brand new apartment. Generally, the developer builds it, leases it up, and holds it for a short period of time or sells it. This is the luxury stuff. Now, we don't personally prefer this type of asset because we believe that the people who live in A-grade apartments don't necessarily have to live there, right? They're choosing a lifestyle choice to live in an A-grade apartment because let's face it, nobody needs a lazy river, a coffee shop, and an unbelievable gym at their apartment complex. That's a lifestyle choice. And we believe that when the market shifts or people have to make different choices because the economy might shift, that they're going to choose necessity over lifestyle. All right, so number 2, moving from the top to the bottom, we're talking about B-grade apartment complexes. Now, these are just a little bit older product, and they're generally nice apartments, nice, safe, clean places to live where everybody would feel comfortable living, and they generally cater to a lot of families or maybe a lot of younger professionals, maybe even students. These are places that have pools, they have gyms, they have nice leasing offices, they have big beautiful campuses and big beautiful acreage and lots of foliage and whatnot. But they're generally newer than, say, an older like C-grade apartment complex. They need a little bit light of moderate value add to make them better, but generally they're positioned in really safe submarkets, and that's what makes them a B-grade apartment. All right, so number 3 are C-grade apartment complexes. C-grade apartments are generally older. A lot of it has to do with how well cared for the apartment is, but generally things that are older than, let's say, 1985, maybe even 1980, those are considered C-grade properties. And so they come along with some functional obsolescence, some age, some wear and tear. But it's actually incredibly important to keep C-grade apartments on the market. We lose about 100,000 units of apartment complexes every single year. And so we need good investors as well as good syndicators to actually be retaining that inventory on the market, because I think one of the things that we've seen over the last year in 2020 was the cost of lumber is going through the roof. It's coming back down a little bit, but it's incredibly expensive to build a new apartment. And as we know, that cost is going to get passed on to the end user. And so we need more affordable housing on the market, which is actually one of the things that we're incredibly focused on right now, which is affordable housing. For a long time, we focused specifically on B-grade apartment complexes, but we think that C-grade apartment complexes and being able to maintain and manage those very well is going to be incredibly important over the next 10 years. All right, so lastly, number 4, D-grade apartment complexes. Man, these are generally dumps, for lack of a better term. They are very low income housing. Not to say that that's not important, but man, it is a very big risk as an investor to take on that type of investment because you're dealing with a very volatile tenant base. Generally people who don't have consistent work or consistent jobs, maybe they're running on food stamps or Section 8 and things like that, which is important and can be a part of a C-grade apartment or even a B-grade apartment. But it's a more chaotic tenant base, and they tend to be positioned in a market that is a little bit higher in crime and not going to have great schools. And so as an investor, you have to make a decision as to why you would want to invest in those. But again, very, very old product, dilapidated and run down, and require a ton and ton of maintenance. You're not going to be moving there to feel safe. You're not going to be moving there to get the nice pool. It doesn't have any of those types of things. It's literally just a place to lay your head at night. All right, so we talked about all the grades. Why would somebody invest in an A-class apartment over a D-class apartment? Well, there's a million ways to make $1 million in real estate, but generally it comes down to a couple of key principles. A-grade apartments offer some of the best capital preservation there is. The product is brand new, so there is not a ton of wear and tear that has to be constantly kept up with and managed. You've spent a lot of that money on the front end, and all that capital expenditure is not there to be taken care of on the back end. For a developer, that's a great investment, right? They've done all that heavy lifting, they step in, they get to depreciate the asset. They then pass that off generally to larger, more institutional investors who are looking to place and preserve capital. But if you're like us, where we're value add investors, we're actually looking for B grade and C grade apartments that cater to what we feel is the largest segment of the market who actually has to rent. And we want the property to be a little bit run down or need some extra work so that we can come in and add value. That's what we do as investors, is we improve the product and make it better for the tenants, which means we can improve the rent, lower the cost of actually operating the property, and net improve the value of the asset. Now on the very, very low end, you have the D-grade apartments, and generally people who get into those are doing it because it's purely about cash flow. They're just looking to put money into the product and sit on it and collect a check. That said, sometimes collecting that check can be very, very difficult. Sometimes you're having to leverage tax credits and things of that nature in order to make the deal make sense. But the reality of it is a lot of sophisticated investors aren't really touching the D-grade product because it is so risky and volatile. And so for us, we want to be able to get all the benefits of owning real estate. We want capital preservation. We want something that has an evergreen life cycle. We want something that's going to allow us to add value and improve the appreciation through the net operating income of the property. And ultimately, we want the cash flow. And so for us, it's B grade and C grade apartments because we need to build about 4.6 million new apartments by 2030 in order to keep up with demand. And there is no way we're going to be able to build that many net new apartments, which means it's going to be a huge opportunity for really good operators who can manage the middle of the market and control and retain assets. All right, that's a wrap. If you liked it, hit that subscribe button, give us a thumbs up, leave a comment. For us, the best way to learn more about what we're doing as it relates to B grade and C grade apartment complexes is to head over to thegrowthvue.com, where you can learn more about how to become an investor, talk more and engage more with our team, as well as read some of the more content and blog that we're putting out on this specific topic.